Well, howdy there, folks, and welcome into today's video. We're going to talk about Cathie Wood in this video. We're going to talk about going all in the Arkk funds in 2022. If it's a good play to be investing into the Arkk funds in 22, if you should expect out returns in terms of out returning the S&P 500, all those sorts of things. Look at my hair. Oh my gosh, I swear it just gets messier as the day goes on, and it's a late day here today. So yeah, but I mean, in regards to Cathie Wood, we're going to go through her performance over the past year against the market. We're going to go through the stocks she holds, what I think about these stocks. Do I think they're good stocks, bad stocks, in between, right? Do I think they're still overvalued? Do I think they have more to fall? We're going to get into all that in this video, but we got to talk frankly about Cathie Wood just for a moment here because it has to be addressed. By the way, if you want to check it out, we got a free video for you down there in the comments section, the pinned comment down there, Voyager 10Q breakdown with Beatrice. So hope you guys enjoy that, okay? But let's talk for a moment about Cathie Wood, right? 2020, I mean, really 2019 it started, but 2020 especially, she obviously got super famous in the stock market, right? She went from somebody that was not very known. If anything, you knew about her because you were inside like the Tesla circles, right? Which I knew about her probably in about 2018-ish. I found out about Cathie Wood. I never knew who she was either. But I heard about her because she was somebody that was also bullish on Tesla. And so I was somebody that was very, very bullish on that stock, obviously. And if you're bullish on a stock like that, you're going to find other people that are bullish on it, right? So I found her. And, then 2019 happened. She started to get really, really popular as Tesla stocks started to go up, right? And then 2020 happened, and she way outperformed the market. Like I think I want to say like 3x the S&P or some crazy number, right? Like it was insane. Way outperformed the market, blew up, got super popular, and now all of a sudden she's, I would call her extremely famous in the stock market. Maybe not on the level of like a Warren Buffett, but Cathie Wood is very famous in the stock market, right? And so that leads us up into basically the past 12 months or so, which have been, to be quite frank, a disaster for Cathie Wood and for the Arkk Innovation ETF, right? I mean, look at this. We're looking at the performance here of the Arkk Innovation ETF, down 14% in the past 1 year versus the S&P 500's up 28% in the past 1 year. I mean, it doesn't get much worse than that. And this is with Tesla being our number one stock. I mean, you'd think it'd be a little better than that. No, it's just been awful, right? Look at the past 1 month. I mean, this is, part of this is likely tax loss harvesting, right? Because a lot of our stocks have gone down massively. So tax loss harvesting, right? The Arkk Innovation ETF total return 16% down in the past 1 month versus S&P 500 is right around break even, slight profit, right? So, yeah, it's been a really, really bad year for her this year. By the way, I thought this would be an appropriate time to go over my returns with the public account this past year. I know a couple people were wanting my returns essentially. So, Fidelity Investments calculates me at an investment rate of return for the public account of 42% in the past 1 year. I think a lot of that has been the pull through from Tesla stock and Revolve stock specifically in the public account. I know I talk about Tattoo Chef and Corsair, but remember, those are stocks I just started building into, huge positions really in the past 6 months or so, and specifically gone really, really heavy in them in the past 1 to 2 months, right? Like extremely heavy. So those haven't really affected me nearly as much as you might think based upon the amount of content I put out in those videos. But I have all these, old dogs. Dropbox has performed actually pretty decent the past 1 year. Walgreens has done pretty good the past 1 year. Had a lot of stocks we've been able to take profits in this account as well. So there's actually, quite a few stocks I hold that have had tremendous years this year. It's just they're not named Tattoo Chef and Corsair, which have been the stocks I've been talking about the last few months now, right? As far as my year-to-date return for the public account, we're at 23.13%, which is calculated by Fidelity Investments, which puts us in line with the S&P 500. I don't like that. I mean, that's not why I put on all this work. I don't put in all this work to be equal to the S&P 500, right? Just flat out. So, it is what it is. I never trip off of a bad year for me, right? $600,000 in profits taken or whatever, it's such a bad year for me. Oh my gosh. But 23% in line is what I go for, right? 3-year numbers to massively outperform the market, 71%, rate of return in the past 3 years versus 20% for the S&P 500 on an annualized return basis, right? We're going to hit 5 years in the public count coming at some point in 22. I think it's kind of toward either summertime or fall time of 22. We'll hit 5 years. Then our 5-year numbers will pop up for the public count because right now it's 4 years old. And yeah, we're gonna, that's what I go for. But nonetheless, it's been a horrible year for Cathie Wood and Arkk Invest, right? Just obviously dramatically bad, right? Now, if we go ahead and we look at the stocks Arkk has, right? Obviously, Tesla's at the top. The problem is Tesla's not a big weighted. I mean, even at the peak, Tesla only made up like 10% of Ark's fund, right? So that's kind of an issue versus, like, for instance, the public account, right? The public account, Tesla position for me in that account probably represents 40%-ish, maybe not 40%, but 35% of the fund. So as Tesla's thrived this year, obviously the public accounts thrived, and Revolve's been a really big position where, she's not able to benefit nearly as much from Tesla stock going up as I think a lot of people would think, right? So, but that's still the biggest position there, right? Roku, she holds that second biggest position. Teladoc, third biggest position. Teladoc would be the second biggest position. It's just gone down so dang much, right? So that's dropped to the third biggest. Zoom, fourth. Coinbase, Unity Software, Spotify, Exact Sciences, Twilio, Shopify. That makes up her top 10. Then you have Square, UPath, this company, I don't know, it's a therapeutics company. Palantir, obviously, very familiar with that one. Twitter, surprisingly enough, 15th biggest position. That's a surprising one for me because, I think about Cathie Wood, I think about her investing into some companies that are, the future, right? Disruptive companies. Twitter is just... It doesn't fit that bill. No hate on Twitter. It's just like, come on, it's Twitter. Like, that's an old dog company that, geez, if they can innovate at anything, that would be amazing, right? Not really an innovation type company, right? You have CRISPR Therapeutics, which is one a lot of people were psyched on in the back half of 2020, and it's just obviously, has been one of those stocks, right? Beam Therapeutics, then you have DraftKings, you have another therapeutic company, you have this 10x Genomics company, you have this company, obviously you got the Hood, Robinhood, which they're just going through a tough time with a lot of retail investors left the market because they got destroyed this past year, right? And they're like, I'm out of the stock market. Hood's not in a good place. Assets under management could drop as well. Sometime soon, we'll see. It's not a for sure, right? But the growth rates they put up, over the past year or so, good luck to those comps in 22. And a few other companies, right? So if we're going to look at her main stocks that are driving this portfolio, right? The Arkk Invest. I look at a lot of these stocks and either I don't know them or they're not really stocks I'm interested in personally owning. So obviously I have a really substantial position in Tesla. So yeah, I like that one, obviously. Roku, I've never been a fan of that one. Teladoc, I think, is at an interesting valuation moment for long-term investors. With that being said, I think it could easily go down in the next few weeks. There's probably more tax loss harvesting in that one from either individual investors or funds, right? That's a mid cap. It's probably a $14-ish billion market cap or so. So that one could easily go down for at least the next few weeks. With that being said, I like Teladoc for the long term. It's a long-term play, but it is a huge money loser on the bottom line. And when it's a huge money loser on the bottom line, there's no telling, if it's going to go up in any short amount of time, right? So yeah, Teladoc, I like that one, right? Zoom, I think Zoom's kind of a one-trick pony. They supposedly have all these different products they offer, right? I'm not really sure how well these other products are selling, to be honest. I think 99% of their customer base, and I'm going to have to look deeper into this, but I think the high majority of their customer base just basically uses them for if they're going to have a business meeting. That's what I think is really going on there. They have a million different products they offer, but I'm not sure any of those are really gaining traction. So I'm going to do more digging there, but it's just not one that's really too interesting to me. Coinbase, Coinbase is a really good company, but man, it's a competitive space. And then if we have any sort of crypto down cycle for 2-3 years, good luck to Coinbase when you're already big dog there. If anything, everybody's coming to take market share from Coinbase, right? So that's something to keep in mind. Unity doesn't have the cheapest valuation. That's for dang sure. Spotify, I'm not the biggest fan of Spotify. I just, I'm somebody that uses Apple Music, and I've just never seen the need for Spotify. That doesn't mean there isn't a need in the market. I think there is. I just think Spotify is in a tough position. And I know they're trying to get into more and more original content, which is smart. I'm just not sure it's going to pay off the way Netflix got in original content. I'm not sure it pays off that same way for Spotify. We'll see. I have a lot of questions about that one. Exact Sciences is not a company I follow. Twilio's always seemed like valuation concern. Shopify, love Shopify, but the valuation on Shopify, woo, okay. Square, I think, is real interesting here. I think, that one at Teladoc for a long-term investor, I think those are, I don't want to call them easy buys, but, closer to easy buys, right? Money makers. This company I don't cover. The therapeutics company I don't cover. Palantir is pretty interesting, although the valuation is still not cheap on Palantir. You look at it on a forward PE basis. You look at it on a price to sales ratio. I wouldn't call it a cheap company. However, it is a beautiful business model at the intersection of data and artificial intelligence, and I think the business model is going to be incredibly sticky long term. So I think that one's very, very intriguing. I think it's close to a buy, but I wouldn't call it necessarily easy money, right? Twitter, Twitter, I just don't see it there, okay? Another therapeutics company there, not something I follow. So ultimately, I look and I say, it's probably going to do, pretty good over time. If I view, Arkk over time, will there be money made over the next year? More than likely, I would say. Let's say January of 2022 through January 2023. Is Arkk fund up? More than likely, I would say, right? I would give it like an 80% probability. Is it up quite a bit over the next 3 years? Yes. Is it up even more over the next 5 years? Yes. Okay. I think a lot of these stocks will have their day, right? And Teladoc kind of had its day a little bit, and then it got its day taken away, right? I think that one's going to come back strong. I think Tesla is going to be at an interesting moment in 22-23 with obviously great sales numbers, great production numbers, and probably should put up some really impressive profitability. But then the question will come about valuation, right? So that will come in. Competition obviously is actually starting to enter the market. So there's going to be all this competition talk, whether that comes to fruition in terms of like anybody putting up some really insane EV numbers in terms of competition. We'll have to see if that happens. But if anybody does, then there will be all those questions about competition, and that will cause Tesla to potentially be a short-term lagger, right? So, but at the end of the day, I think it's a money maker over the coming years. I just think, honestly, it's better to take your money kind of in your own hands and, basically invest your own money, right? Pick the best of the best that you think has the most upside potential over the next 3, 5, 7 years in Cathie Wood's fund and buy those stocks. And then you don't have to worry about the rest of them because the rest of them are the rest of them, right? You don't know if some of these companies are good. And, there's plenty of them on that list that I think are very, very complicated business models to understand, that a lot of them are huge money losers. And some of these will likely get to profitability or big profitability, but it's hard to tell exactly which ones, right? And so that's the difficult moment with something like this. So overall, yeah, I'm in favor of the Arkk fund. I'm just not in favor of necessarily putting all your money in it. If anything, a very small position, and then put the money in the stocks you actually want to hold. Okay. So, anyways, hope you guys enjoyed this. As always, if you're looking to check out Beatrice, our certified CPA, went through Voyager's 10Q statement. Check that out. Much love as always, guys. Handle your own money. And don't forget to subscribe to the channel and have a great day.